In today's global economy, cross-border investing opens doors to new opportunities, but it often comes with complex regulations, high fees, and slow transaction times. Enter blockchain platforms, revolutionizing how investors buy, sell, and manage assets internationally. By leveraging decentralized technology, these platforms offer faster settlements, enhanced transparency, and reduced costs, making global investing more accessible and efficient than ever before. Let's explore how blockchain is reshaping the future of cross-border investments. Today, we will talk about cross-border investing using blockchain platforms. So before we start, make sure to hit the like button and subscribe to my channel. Cross-border investing refers to the process by which investors allocate capital into financial assets located in different countries. This practice allows investors to diversify portfolios geographically, gain exposure to emerging markets, and potentially achieve higher returns. However, traditional cross-border investing comes with a myriad of challenges. Investors face regulatory hurdles across different jurisdictions, currency exchange risks, delayed transaction settlements, and high intermediary fees imposed by banks and brokers. The lack of transparency in some foreign markets can also heighten risks, making cross-border investments complex and costly. Moreover, the cumbersome paperwork and due diligence required to comply with multiple countries' regulations often discourage smaller investors from participating. In this context, blockchain technology emerges as a groundbreaking solution with the potential to simplify, secure, and democratize cross-border investing. Understanding blockchain technology and its relevance. Blockchain is a decentralized distributed ledger technology that records transactions in a secure, immutable, and transparent manner. Unlike traditional centralized databases controlled by a single entity, blockchain's consensus mechanisms ensure trust and accuracy without intermediaries. This innovation has profound implications for finance, especially cross-border investing. Blockchain enables tokenization, the process of converting ownership rights of assets into digital tokens on a blockchain, thus facilitating fractional ownership, instant settlement, and 24/7 trading. Smart contracts, self-executing contracts with terms directly written into code, automate complex cross-border transactions, reducing errors and delays. As blockchain networks operate globally and transparently, they provide an ideal infrastructure to streamline cross-border investing by mitigating friction from intermediaries and jurisdictional barriers. How blockchain platforms facilitate cross-border investing. Blockchain platforms designed for investing offer a seamless interface where investors can buy, sell, and manage digital securities representing shares, real estate, commodities, or funds across borders. These platforms provide global access to tokenized assets, allowing investors to diversify portfolios with ease. Traditional processes such as Know Your Customer (KYC) and anti-money laundering (AML) checks are integrated into blockchain onboarding, ensuring regulatory compliance. Cross-border payments, typically subject to delays and high fees, are expedited through cryptocurrencies or stablecoins on the blockchain, providing near-instant settlements. Additionally, blockchain's transparency means that all transaction histories are recorded on a public or permissioned ledger, reducing fraud risks and increasing investor confidence. With these innovations, blockchain platforms effectively dismantle traditional barriers, enabling smoother, more inclusive global investment opportunities. Benefits for investors: speed, transparency, and cost efficiency. The adoption of blockchain platforms transforms the investor experience in several key ways. Firstly, transaction speed is dramatically improved. While conventional international fund transfers can take days, blockchain-based payments settle in minutes or seconds, allowing investors to capitalize quickly on market movements. Secondly, blockchain's inherent transparency provides real-time visibility into asset provenance, ownership, and transaction history, elements crucial for due diligence and trust. Thirdly, by eliminating intermediaries such as custodians, brokers, and clearinghouses, blockchain reduces transaction fees significantly, making cross-border investing more cost-effective. Furthermore, fractional ownership via tokenization lowers the entry threshold for global assets, enabling retail investors to participate in markets previously accessible only to large institutional players. Lastly, blockchain platforms' 24/7 availability contrast with traditional market hours, offering unparalleled convenience and flexibility. Regulatory landscape and compliance challenges. Despite the promising advantages, cross-border investing on blockchain platforms operates within a complex regulatory environment. Financial authorities worldwide are still adapting their frameworks to address the unique characteristics of digital assets. Jurisdictional differences in securities laws, taxation, and AML regulations create uncertainties for both platforms and investors. Some countries treat tokenized securities as traditional securities, requiring compliance with prospectus and licensing rules, while others lack clear guidance. This regulatory fragmentation can slow adoption and expose investors to legal risks if platforms do not enforce robust compliance measures. Additionally, cross-border AML regulations necessitate rigorous identity verification and transaction monitoring, which blockchain platforms must balance with user privacy. Nonetheless, many jurisdictions are actively working to create clearer frameworks to foster innovation while protecting investors, signaling growing acceptance of blockchain-enabled cross-border investing. Risks and challenges specific to blockchain-based cross-border investing. While blockchain platforms offer numerous benefits, they also pose unique risks that investors must consider. The volatility of cryptocurrencies used for settlements can introduce price risks during transactions. Security vulnerabilities such as hacking or smart contract bugs have historically resulted in asset losses, necessitating continuous technological vigilance. Additionally, interoperability issues between different blockchain networks can complicate cross-border asset transfers. The nascent nature of blockchain also means less established dispute resolution mechanisms compared to traditional finance, raising concerns about recourse in case of fraud or errors. Moreover, investor understanding of blockchain technology varies widely, and lack of education can lead to misinformed decisions or exposure to scams. Hence, despite the transformative potential, prudent risk management and investor awareness remain critical when engaging in blockchain-enabled cross-border investments. Use cases and real-world examples. Several pioneering platforms and projects illustrate how blockchain is revolutionizing cross-border investing. For example, platforms like Securitize and TZRO enable tokenized equity offerings accessible to global investors with automated compliance. Real estate investment firms have tokenized properties, allowing fractional ownership and global participation through platforms like Realt. Moreover, decentralized finance (DeFi) protocols facilitate cross-border lending and asset management without intermediaries, providing liquidity across borders. On the payment side, companies like Ripple use blockchain to streamline international money transfers for investors. These real-world examples demonstrate not only feasibility but also growing adoption and trust in blockchain-based cross-border investment solutions, foreshadowing a broader financial ecosystem shift. The future outlook and potential impact. The future of cross-border investing using blockchain platforms looks highly promising but will require coordinated efforts among regulators, technology providers, and investors. Advances in blockchain scalability, interoperability, and security will further enhance the efficiency and accessibility of global investing. Integration with emerging technologies, such as artificial intelligence and big data, could improve investor decision-making and regulatory oversight. As digital identity solutions mature, compliance processes will become more streamlined, fostering trust. If regulatory harmonization progresses, blockchain platforms may become the dominant infrastructure for global asset exchange, democratizing investment access worldwide. Ultimately, blockchain's potential to dismantle geographic and financial barriers could contribute significantly to global economic inclusion, empowering individuals and institutions alike to participate more fully in cross-border financial opportunities. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.